for Mr. Benjamin Enamudu.
Thank you, Madam Rabbit. You didn't really attend to other names, so she had to check it properly. All right, good morning, everyone. It's an honor and a privilege to be with all of us talking tax this morning. We have quite a lot to look at, and my time says I have 1 hour 30 minutes, and I always like to speak to the time. It's not for anything. Participants are also monitoring the time. Once you start getting beyond that time, you start losing a part of your audience. Please just ask that work with our 1 hour 30 minutes that we have. So we'll be looking at value-added tax and withholding tax. All right. So while preparing this paper, as oft as we do, because when you're talking tax, you could be talking tax at a much higher technical level, and you could also want to bring it down to the very basics. All right. So what we try to do is to have a bit of a mix of both, so that among the participants, we could just go ahead and start talking about, somebody didn't even understand what VAT is all about, what withholding tax is all about. So we try as much as possible to accommodate everybody. So as we make progress, if there are by chance any words, phrases or clauses that we're using that will sound a bit, please call my attention so that I break it down. The idea is that we are all expected to learn. I know some of the things we are discussing, those of us who are already accountants and finance and tax experts will be familiar with quite a lot of what we'll be discussing, but will help you understand it from a practitioner's perspective, as I am into practice, beyond being the chairman of CIT and Abuja District Society, a tax practitioner, tax consultant. But I can explain things from the angle of a consultant. I should be different from how the NRS would explain it to you as the tax administrator. We'll be discussing the same subject matter, but we're explaining it from two, I don't even get the idea, all right? We're explaining it from two different perspectives. I was supposed to go take a training with the INGOs in Abuja have a forum of INGOs. Was supposed to go and take them the paper on these tax reforms. Then one of the lead called and said, you know what? Please don't bother yourself. The NRS people have come to explain it already. And I was like, okay, but are you sure that's sufficient? So like, but it's the same thing you are going to explain to us. Then somebody put up an argument. This guy is not charging us, he's coming to do it for free. And we just need to put it all together and then let him come and explain as much as he could. After the lecture, they were like, it seems you are saying it differently from what he said. Now we understand, and that was what I was trying to explain. You can understand both perspectives. The beauty of it is that I've seen the calibers of the facilitators that we put together, top notch. I saw Femi Olarinde, the MC to the president of executive chairman of FRS, that will be taking us through some of the papers. More fantastic. But he's going to speak from an administrator's perspective, all right? Going to tell you the way the book say it should be. But consultant, you know all the chorus that we will follow and get us from some very naughty situations. So that's just by way of a background into what we're looking at today. So reforms and implications for businesses. Essentially, we are still discussing the whole tax reforms. So I don't want to go into the details of the benefits of the reform. I'm sure we handled all those ones yesterday, right? The various acts under the reforms, the NTA, the GRDEA, and the NRSEA. We've discussed all those ones yesterday. Are we? Cool. So we can just move into the core of what we have for us. So by way of outline, we'll be looking at deduction at source. That's actually technical name for the act, the regulation that guides the withholding tax in Nigeria is the deduction as source regulation. We'll be looking at the rates table, exemptions from withholding taxes. What are those transactions or entities that are exempted from withholding tax obligations? Then we'll cross quickly into the value-added tax environment. We'll look at some of the new rules that came up with the reforms as relates to value-added tax. And then we'll look at list of VAT exempt, zero-rated items, explain what we mean by zero-rated items and VAT exempt items. And then we'll look at the e-invoicing and electronic VAT fiscalization. And then we'll look at the updated VAT sharing formula. So essentially, what this paper tried to do is to look at, because VAT is not new, we've always had VAT in Nigeria, effective, I think, 1992 thereabouts. But what the reforms have adjusted, what are the new things the reform is bringing into the VAT environment? That's what we try to narrow down on, so that we don't go into some unnecessary aspect of it. What we need to know now as against what we've always known before. All right, so we'll look at withholding tax. Essentially, withholding tax in simpliciter is an advance payment of income tax. So, as an individual, you are expected to file your taxes at the end of the year, right? So you are a contractor. You do contracts with government, with different businesses. At the end of the year, government expects that all the jobs you've done from January to December, you should come and pay taxes on them by the following year. Don't forget, it's not one transaction. There are multiple transactions you can turn. So you could have turnover of, say, ₦1 billion from January to December. But at the end of the year, the cash you have is for you to start business the following year. Don't forget, businesses are also managing cash flow. Then suddenly you now realize that you have a tax obligation of, say, ₦30 million from the 1 billion transaction you had in the previous year. Yeah, you now have tax obligation of, say, I'm just taking an imaginary figure, 30 million after deducting your expenses, then you have your profit and you take a percentage of your profit. You have an obligation of 30 million to settle. But you don't have 30 million anywhere, right? But that obligation is present and you need to settle it. It now became expedient that we create a system where government is taking from that 30 million you are meant to pay. As those transactions are occurring, government is taking a small portion of it over time. Right? So you do 100 million, government take 5%. You do another 200 million, government takes another 5%. At the end of the year, cumulatively, government has taken 45 million naira from you over the course of the year. Are we getting it? So in the course of the new year, your obligation is 30 million naira, but you have 45 million naira tax credit with government by way of the taxes they prepared, over the period. What that means is that you don't even have any obligations to settle. All you need is to file your returns and tell government from the 45 million I have with you, please remove 30 million and keep the remaining 15 million with you. So it's easy for you to settle. It's also easy on the part of government. They don't need to be chasing you, around to get that money. You could also be a scenario where government has withheld 45 million from you, but at the end of the year, your tax obligation is 48 million naira. All right, so you have 48 million to settle, but all the credit you have by way of withholding tax is 45 million. What that means is that you now have 3 million naira to add to what you already have to settle your tax obligations for that period. That's what withholding tax is all about. So it applies to both corporate entities and also to individuals. For as individuals as well, or those who register business name and enterprises. So when you do transactions, At the end of the year, you're also expected to go to the relevant state internal revenue service and file your personal income tax returns, right? So the same situation applies. If you don't have those credits ahead of you, you will need to settle your obligations with raw cash. And the reality is that nobody keeps such cash down and say it's tax, I want to use it to settle. It's convenient for everybody, convenient for the tax authority, and also convenient for the taxpayer. You have credit with government, so when it's time for you to file your tax, you don't need to be running helter skelter trying to raise funds. You already have the fund that is reserved for that purpose. That is some your whole idea about including tax. All right. So after explanation, so withholding tax, like we said, is an advance payment of income. Yes, also importantly to clarify, it is not a type of tax in itself, right? It's not a type of tax. So when people are saying types of taxes in Nigeria and they list withholding tax, that would be an anomaly because withholding tax in itself is not a tax type, but rather an advance payment of your income tax that you are expected to settle at the end of the year. So the withholding tax is like your CIT paid upfront or your PIT paid upfront. That's how the mechanism of withholding tax works. All right, so withholding tax is holding back a percentage of the whole. It's the act of retaining a prescribed portion of an income payable to the taxable entity for services rendered, goods supplied, or investment income that is earned and paid to the relevant tax authority on behalf of the beneficiary taxpayer as an advance payment of income. So withholding tax applies to a variety of transactions. And you and I pay withholding tax whether we like it or not, right? So if you have shares in companies and they pay you dividend, you will notice that your dividend certificate, there's always a 10% that have been withheld from it. Where the money goes, I don't know. All right. Ideally, the way it's ought to work, except is a frank investment income. Frank investment income and those income that is, who will explain? Sorry, let me explain frank investment income. We'll get to it so that we don't want to load too much information at this early stage. All right. So the idea is we want to understand what to do that is all about, basically. Right? Okay, so let's move on to. As a form of transaction tax, it uses transactions or activities as the object on which specified rate is applied to arrive at the amount deductible. This is trusted to know that withholding tax is not another type of tax, but the collection mechanism, which is payment on account or advance payment, or sometimes, like I was trying to explain, frank investment income. It could also be the final payment of company's income tax or personal income tax. In this regard, credit notes, which are the tax credits, those ones that are withheld, they are credits to you, right, are issued as evidence of advance payment of tax to be used to offset future tax liability. So technically, what this is trying to explain is that when I withhold money from you, I'm supposed to give you a credit note, practically, to show that I withheld these sums of amount from you as a person or as a company. But in reality, from experience, I've noticed that that rule has not yet become pervasive. Many organizations still just withhold, and then because of the way tax promise is configured. Okay, for those of us who might not know, tax promise is the portal of the Nigerian Revenue Service as we have it today, where you make your tax payment and file your returns. So sometimes they could just get your team and pay the withholding tax directly into your account with the NRS. So every taxpayer, for instance, has an account, just like we have bank accounts. We all have accounts with the Nigerian Revenue Service. Every company that has their tax identification number that is registered has an account. So when they have a tax credit to you, they just want to pay it into your credit. But the regulation actually mentions that you are expected to issue a credit note to the vendor or your supplier as the case may be. But once the money is in my accounts, of course, I'm not too bothered about whether they gives you note or not. At least it's just like somebody sending money to your account and you have seen an alert and he's still sending you not even is even good. If I share it with the teller that you want to use to pay the money before, how are you going to do with the teller after that? The important thing is that you receive your credit and there's evidence that the money is already with your person. Yes, please. Thank you.
So when we pay to
Yes, the person that did the job or rendered the service or the supply to be paid into your account. So it's like a credit to you, just like I mentioned with the bank account. It's credit in your account.
something
That is, I don't change whatever. No, there's not the name of the company. But
I think that error happens a lot of times.
oh really?
Yeah.
So now we know. Alright. So about 95% of organizations' payments are tracked withholding tax. This is just a case, I think 95%. But I will explain those ones that don't attract withholding tax as we move along. Alright, so this includes subcontract, purchases, consulting, and services involving withholding tax, deductions, and remittances. Alright, so the Tax Administration Act 2025 did mention that where a company fails to withhold, or an individual, as the case may be, an enterprise, sorry, individuals are not allowed to withhold. So that we're actually included here. Or maybe I should mention it so that I don't forget because I didn't include it. So the rule specifies entities that are permitted to withhold. So individuals are not included. So as a person, I cannot do someone doing a job for me as an individual, in my individual capacity. I now tell the person that the withholding tax law says that I should withhold. And if I don't withhold, I'll be charged 40%. No, that one doesn't cover individuals. Individuals are specifically exempted. Why is this restrictive? There was a time one of the platforms, somebody threw a question that case study scenario that someone rented an apartment. Rent is liable to withholding tax. So somebody rented a house, a chartered accountant. So when it was time for him to pay the landlord, he told the landlord, my rent is 3 million, but the law says I should withhold 10% of the rent. It's 300,000. Landlord says, either you pack out another house. And the man was insisting, but that's what the law said. The law said I should be to them. The question was not asked, what should be done? I was quite surprised that many people were just providing that the accountant is very correct. The law says that you must be doing that. Well, that is what landlords are doing. They don't want you to withhold their money, they don't want you to apply the law. I was like, okay, but I just had to come in when I realized that the deviation was getting much. Like the rule says, individuals are not required to deduct. So he as a person cannot do that deduction. But if he was renting that property with his company, or in the name of his company, or in the name of his enterprise, definitely is required to do what? To withhold that money. Even to the landlord, or not the landlord in Nigeria, actually more landlords generally. They don't want you to withhold them from their money, but the rule is very clear. If you have a question, sir.
Yes, sir. Okay, so like between landlord and
Tenants.
So what about the case where you have a property management team, like an entity that is property management, standing on behalf of the landlord collecting the rent from the tenant.
Okay.
Now the money pass through the property management entity before it gets to the landlord. Now the landlord is using that the property management should not withhold any portion of that rent submitted by the tenant. So in that case, what can
be done?
Yes, what can be done between the landlord and
Okay. So the question you're asking, you're actually going into tax consultancy service. You're supposed to send you people to start answering some of this question. But it's fine. It's questions that come often. So what actually played out there in that scenario, you give the landlord his money 100%. But there's a percentage of commission you or any as a management team. But that's money, there's a withholding tax element involved in it. You understand? But as to the money you are giving to the landlord, you have to give the landlord their money 100% because the person that rented it from the beginning was an individual. So please ask your questions. You don't mind, I'm just putting it there. Ask any question at all. The one that cannot answer, I will call person. Come on.
On the issue of enterprise.
Yes.
Only the enterprise are not separately entities. Because there are times when you want to, the bank want to give loan to enterprise, they will write the name of the person, trading on that name as child of, because it's by a legal entity. So if the law is saying individual should not, because as it is, that entity is not seen under the law as legal personality. That's the enterprise, that's the venture. So I don't know the mind of the writer of the law.
Okay, so
with that.
So you are right, and also not also right at the same time. You are right as to the extent that individuals and enterprises are seen in the eyes of the law as one and the same. But essentially for tax purposes, I mentioned something at the beginning that we are looking at the practical aspect of taxation as different from what the administrators would likely want to tell you. The reality of it is that for Nigerian tax purposes, enterprises are treated as separate from the individuals. For Nigerian tax purposes, as it stands today. I run a practice firm. At the end of the year, I get tax clearance for myself. My firm, I also go and get tax clearance for it. That's actually wrong by the way our laws are couched, right? One tax clearance covers me and every other enterprises under my purview. But the reality of it is that I want to go and bid for a government job in Ministry of Justice. And I go and they say one of the requirements is tax clearance certificate. And I go and put my company name, maybe SNS Ventures, then I'm putting the certificate inside that submission. I can tell you for free, you will not be considered. For free, they will throw away your document because they will tell you don't have tax clearance certificates. So you go to tax authority, they will issue you your own individual tax clearance and still issue you tax clearance in the name of your enterprise. So enterprise for that purpose is best you be on the side of safety and treat it as if it's having its own quasi-legal status. You understand? So for enterprises, you will be expected to deduct because it's seen as a business. Don't forget, even the audit mentioned businesses and mentioned individuals separately. So it recognizes that you can be an individual in business. All right. So let's look at it from that angle. It's fine, sir.
Yeah. Then secondly, sorry, I'm asking.
Please answer.
For those who in employment and for shares, because we will see that there will be when the activity are paid, there's no improvement. But most times, the state does not seem to recognize your credit, to have a credit in favor of those because in those days there are staff that are very huge in the stock market and they get huge dividends. But most times there's nowhere to like we have the task force to trace that.
Okay, I think there's actually a different problem from the one you have discussed. So for dividend interest, I was trying to explain front investment income. I ran away from it, so I had to go back to it and still explain it. So there are some withholding taxes that you pay on certain transactions. It is deemed to be final and conclusive. After you have paid that, after they are withholding on those specific transactions, you are not expected to pay either company income tax or personal income tax on it anymore. So that amount that has been withheld is deemed to be the tax that is applicable to that transaction. So if you have such transactions, they are deemed as front investment income. So short-term securities, interest on fixed deposits, dividends are front investment income in the hands of the individuals. That's why you don't see the credit. Why? Because government has taken the money. Government is saying, take your dividend. Nobody is going to, even if you end the dividend of 1 billion naira, right? You don't pay any other tax on it after the utility that have been deducted. So it's pure income for you, right? However, in the case of companies, dividend is allowed as front investment income, but interest, you have to bring it in as part of your income for the year, calculate the profit, remove the amount that have been deducted from and then get the balance. So they would need to have that information we are talking about. Now, where I'm particularly concerned is that these dividends that are being withheld, they are supposed to be in your name. But the situation today is that all the dividends are just paid to NRS straight. They are supposed to go to the states where the individual that has that dividend is residence, because it is your own money that was withheld. So that money that was withheld should go to the state, your state government or the internal revenue service of the state. Okay, yes, sir.
Sorry, just for so to beneficiaries of all. I just want us to stick to slide. Okay, because if you see the second part, I say where company pays to load the company will pay 40%. That is, if like a company that you are being issued an invoice and you're supposed to pay. If it's company to company, of course, not to return it to attract 40%. If you don't remit, of course. So I think at this point, what should be our focus? The situation between company to company. Company is the owner of the property, company is the one renting. What happened? Between a business name and a company, what happened? Between individual, what happened? I think with that kind of situation, you explain here better. Because if you go deeper back, some things you're bringing, sorry, I'm sorry to say,
Confused.
you'll be confused. So me, I'm seeing just three scenarios. Company to company. Company is the owner of the property, company is the one also renting out. What happened between the two? Can you know? Yes. Between business name and company or company, business name to business, can you be told yes or no? Between individual, this is where this is applicable. So that would be a quick thing for us now. But as time goes on, I believe some of this will also come up so that we also benefit.
Okay, thank you for your explanation. You know, when I started, you were around. So what I explained then, which is the reason why I said feel free to ask questions, is that I appreciate that not all of us are on the same frequency when it comes to some of these past discussions. And I don't want us to go too far. And somebody I'm talking, instead of the person to follow well that when he's thinking about that question he has and he's holding on to it, and he's not even following over that. It's not like I said, if you have questions, just release it, you take it quickly. Sometimes in the course of explaining the question, we're actually touching on some aspects of the slides that we have, that are ahead of us. So I don't want us to lose anybody. That's why I'm taking my time. I'm also monitoring myself to see that I'm also staying within the time frame that we are. But the idea is not just to run through the slides, is to enable the audience fully participate and understand where we are doing and how we are making progress. But I appreciate what you are saying. You are an accountant. So some of the things that I'm saying may look like the task practitioner. Exactly. So you may look like accountable now. You have said this thing before, why you say it again? But I know somebody that needs to hear maybe like 2-3 times before it finally sinks in, like, oh, okay, now I get it. Okay. So we'll just deal with us as we are moving slow. We'll try and stick to the slide and see. So like you just mentioned, there's penalty for not withholding. Before now, the penalty for not withholding is 100% of the amount not withheld. 100%. But with the new regulations, the penalty is now 40% of the amount not withheld. That's 10% plus 30% interest. But they just lumped it together with the new tax reform, so they don't even need to separate them. So 40% of the amount that you expected to withhold that you didn't withhold will now accrue as a penalty for not withholding. So this is to discourage people from doing transactions that are eligible for withholding tax without doing the proper withholding. So let's look at the withholding tax rate table. All right, so the table is calibrated into 2 broad sections: corporate recipients and non-corporate recipients. Under corporate recipients, we have residents and non-residents. And for non-corporate recipients, which will be individual enterprises, estates, families, and so on and so forth, it will now be resident also and also non-resident. So we just look at it like individuals and companies. Right? So for dividends, it's the same rate of 10%, whether you're an individual or not, 10%. However, for royalty, 10% for companies, whether you are resident or non-resident, 5% for individuals when it comes to royalty. So if you have like a mine, all right, where people are mining and then you took a lease on the mine and someone is using it and then they are paying you royalty. As an individual, they are expected to withhold 5% before paying you the money, right? But for a company, it's 10%. Therefore, rates, which we mentioned earlier, hire on lease is 10%, whether you're an individual, resident or corporate, non-resident, as the case may be, irrespective, it's 10%. Then we have commissions, consultancy, technical service, management, and professional fees that are as applicable to corporate clients will be 5% for residents and also individuals 5%. But for non-residents, whether you are corporate or non-corporate, it will be 10%. Okay. Any other form of construction related activities, 5% for companies, 5% for residents and individuals, and 10% for non-resident. Brokerage fee, just like in the case of commission, 5% for corporate recipients and 10% for non-residents, right? The supply of goods, this used to be around 5% before the regulation came. But it turns out that there are a lot of goods that the margin you won't have on there is not even more than that 5%. A lot of goods that people supply, the margin is more than 5%, and government has taken 5%. It means that people carry the money now since you want to take all the profits from it. So government in their wisdom reduced the rates to 2% for residents. For non-resident, there's no withholding tax on supply of goods. Other than, yes, very importantly, other than by the producer or manufacturer. So the reason why that clause is there is because when someone supplies you goods and the person is the manufacturer or producer of that goods, the law is exempting that transaction from withholding tax obligation. Did you get that? And the manufacturer, I manufacture, say, furniture. All right, I buy wood, phones, I couple them together and I produce furniture and I sell them in my name. That transaction is exempted from withholding tax obligation. Or maybe Nigerian breweries, there's a program going on in Abuja and they are supplying drinks directly to the end user, right? That transaction, that supply is exempted from withholding tax obligations. So if you are the producer and the manufacturer, you know exempt such transactions from withholding tax obligations. It's only when Nigerian breweries has a distributor, right, in Abuja, they supply to the distributor. They have major distributors. Major distributors supply to smaller distributors. Before it gets to the end user, that transaction is liable to withholding tax because that distributor is not the manufacturer or user of those processes. Okay, so essentially is to encourage more people to go into manufacturing. I think that's the idea. I like that question because when government comes with any new adjustments to say what does it solve, or what is the end game, what is government trying to achieve with this arrangement, is to encourage more people to go into manufacturing and also importantly to not tie down the capital or funds of manufacturers. You know, manufacturing involves a lot of cash outlay. So if you begin to hold on to their money, because if I supply a good in January, for instance, you'll be told 5%. Let's say I supply good of 1 billion naira, you have automatically withheld 50 million naira that I could have used to do, other activities during the year, before the year ends. You have held on to my money, I can't have access to it. So government is trying to free up cash flow for producers and also encourage more people to go into manufacturing. Co-location of telecoms, server the rate is their supply and rendering of services other than those specifically listed in the schedule. So the services listed in the schedule, would include these 4, 5, and then brokerage fee. But the same time, your services is not captured here, then any other supplier or rendering of service, 2% for residents, 5% for non-resident, whether corporate or individuals. Yes.
Okay, so I have two questions. First being, should, you know, the way when you're invoicing VAT, it's obligated as VAT. Is withholding supposed to be reflected as well in the invoicing?
A bit of yes, and sometimes not necessary, but the idea is that the obligation should be told is not on you, and you are rated so the obligation is on the person that is paying you. So whether you put it there or you don't put it there, it will be obligated to be.
Yeah, but I'm just saying for total clarity, so it's what happened was, I mean, during last year, came to our notice that especially when you are working with public institutions, they would rather not see that. Just let them.
You will not say,
Best
is
practice.
it the government
Rather to
agency?
see, yes,
But they don't want to see it.
yes, reflected as part of invoices. But that wasn't practice before, that's sort of new, sort of new.
Maybe specific government agency, there's no rule that says you can't put it there, but like I said, the obligation is on them. And I also tell you for free, sorry sir, so that I can also tell you for free, many of these government agencies, because I just work with them, their knowledge of tax is very scanty, right? So they just want to do it the way they understand it. That thing you are putting there may be something that is stress somebody on balance. And say, you know what, I don't even want to see it. You know, just rather just tell me how much your money is, I know. Because business is programmed to withhold, whether you like it or not, right? So they want to just give us your invoice, we'll do the withholding from our end. You don't need to tell us how much we pay.
So now that you say it's not specified whether I should have, I'm just thinking.
Added, it's not added, you don't get
It's
it.
reflected, no, I mean, it's
Reflected.
reflected.
Yes, reflected in the invoice.
Should be holding separated from your money and your one and the.
The charges, so your charges like your
You
actual
understand
cost.
what I mean? So if I'm charging. Right, we need the logical code to add 10% on that. I say 5 million. I say 5 million. I mean, I'm not talking about that now. And they said it looks to me like okay, right?
Yeah.
You should eat from what I'm meant to get that 5 million that has come to me.
Yeah.
So it's it looks logical to me that I should.
You want to, you're saying whether you can add it to the amount so that at the end of the day, the net is still the same. That's more like an illegal, but I don't know which person will accept to say we have agreed for 50 million. Then when I want to do that money is it's part of his own money as well. You understand? So I will not pay myself 55 million for a job that I've already agreed for 50
Because that's
million.
why I think
I don't think
it's
anyone.
add it.
No,
It's just because.
you add the class.
I think some of the rates, some of these rates are revised. So for example, consulting and construction. So I know again, I think the practical cases of where it was a 2.5%. This is being last year, a number of cases where contracting jobs were billed at a 2.5% with I'm not sure what is still. Yes, construction. Yes. And then I think consulting was again at some point 10%. I feel like it's now revised to
Last year.
So last year was revised to
The withholding regulation came into effect 1st January 2025. Are you sure what you are explaining is last year or 2024? Because if it's last year and you are using a rate that is different from this rate, there's something probably wrong somewhere.
You're referring to the set by last
Just act.
on construction.
Yeah, that was it. On construction, but no, it was before the regulation came on board. That was when we had the 2.5%.
So yes, so the case that my knowledge and understanding. So pre when there was the revision, it was 5%. When it was revised to 2.5, then that was put into effect. So
let me explain. Let me explain 2.5%. So originally it was the 5%. what? Construction. But during the tenure of Goodluck Jonathan, some construction organization approached the Ministry of Finance, tabled their complaints and then explained that, look, we are having issues with this utilities, it's too much or not, just like I mentioned, it's tying down our cash flow and all that. The minister gave an order to reduce it to 2.5%. So that's where the 2.5% you're talking about came from. So, but the problem was this: there was another portion of the law that said that the minister on her own cannot discretionarily decide to increase the money to reduce the rate to 2.5%. So there has always been that lingering issue: should it be 5 or should it be 2.5%? This regulation settled that argument. To say, okay, this is the rate, because this one was not signed into law after all the processes have been followed. To say, going forward, you use 2% for construction contract. So if you are doing anything outside this now, right, then I wouldn't know, like I said, there's a gap somewhere. So 2.5% came from Okonjo-Iweala, right? Ordinarily, it should have been 5%. So the 2.5% was implemented for some period. Then NRS went and said, look, Madam Minister, you really don't have the powers to, do that, based on present laws that we have. And then I think it was the Finance Act that mentioned something around it. But with this regulation, everything they collapsed into this to settle all the ambiguities as to. Then you mentioned you meant consultancy. Consultancy for corporate organizations was 10%. Yeah, whereas individuals was 5%, as at then, but now it's 5%, both for individuals and for corporate organizations.
I want to ask another question. Well, this people,
Yes.
so if I'm counting my bill, it will be total, including.
Yes, sure. Yes, when you are. So what he is asking is that at the end of the period, it is to recognize his revenue, right? It's not the rates that enters the account of his revenue, it's including the amount that was withheld. I mean,
Yes.
makes sense now. That's the total invoice you raised. All right, so let's move on quickly.
Right, so that the CIT now can now.
Yeah, when you now do your CIT, you can now use the credits to offset whatever liabilities that you have at the end of the year.
Well, in the case where you don't have the credit notes.
We don't have a credit notes. I tried explaining that earlier, that because you use the tax commerce portal to make that payment, automatically once they pay, it hits your account.
Yeah.
Like I already mentioned, every organization has what we call a team. It's like a bank account that you keep in your bank. Well, rather this time, you are keeping that bank account or that account with the Nigerian Revenue Service. So anything that is to your credit will go into. So all you need to do is once they say they have made payment, you check and see that the money is in your credit. Once this, you don't make the notes. Maybe it's not there, you can.
There are some government organizations that do not relate to. You just go to a tax woman and find out that your money.
If you know how to call this class, it's not this way. I'm explaining that again. I didn't mention that there's scanty knowledge about how tax work among many of our public servants. So what they do is that, you see, for the person that is making that final payment, you are giving them a team to pay the money. What they do most times, or a lot of times, they lump up that money, right? They lump it up. So you do contract with everybody here. Instead of paying to their individual team, to their individual bank accounts with the NRS, they lump the money together and just give it to NRS. So NRS comes and says, this is the contract we've done for the year. You see the payment you have made, we don't have a problem. So NRS is cool as long as the money is in their own books. But the contractor now at the losing end because that money is not in their place. So most times, you go back to them, they will give you a schedule. NRS has modality for sorting that kind of situation out. Yeah, because most government agencies they have to pay, unlike before, because now they just give me scans to keep the system, but they long it up. That's where the problem mostly arises from. Instead of paying them individually to every contractor, the demand is having 100 transactions to post in a day. and you think he wants to sit down there and be posting each one, he will spend like 3-4 days.
We have that,
Doing
we
that.
have that issue.
Yeah, it's a common issue. That's why I say I know where that issue is coming from. They don't call the handling. So you go to the NRS to log the complaints that you have credit note from so and so organizations. They have a department, the tax accounting department, they do the reconciliations and but they are sorting it out. I think part of the argument was that the problem is not just from the desk officers, it's actually the IFMIS system problem as well. But they are resolving it. I'm sure going forward, with the new portal they are just released, probably is one of the things that will be taken care of. Ref 360.
I wanted to ask, so now with that portal, is it possible that I can pay one lump sums? And then I go to my portal and I separate, or,
How do you pay the lump sum?
so this situation that we're talking about, like, I have.
You can pay the lump sum to CBN, to NRS account to CBN, but they have the schedule of that lump sum. So you go back to that agency, you request for that schedule, then you attach that payment. Go to the NRS and say, this payment, this that was paid to you is for these 100 people. My number is number 36, and this is my money. So they will credit you now for the NRS. But they are also being careful. They don't want to.
They are not giving you the part to that yourself.
No, you don't have the means to do that.
I'm saying that portal.
No, you don't have login access to GiftWays, for instance.
No, not give me. I thought the
tax programs.
tax programs.
The lump sum payment will go to there's a general account. You know, when you are paying money, you pay into individual accounts. But in this case, that money is lumped together and it's paid into like a suspense account with the NRS. So it is the